Welcome back, guys. Welcome. Hope everybody's had a good weekend. Yo. Is there a difference in the sound quality? Can anybody notice a difference in the sound quality overall? Because I've switched back to the mic. Quieter. Yeah, hopefully it's okay. I think the overall quality is better. I'll try to speak up a little bit, but I think it's better than just using my laptop input. So but yeah, welcome back, guys. It's been a while. It's been a weekend. Yeah, I think you will hear the click in the background and like the chair and but it's okay. The chair might start doing some analysis sometime soon. So it's probably got something good to say. Yeah, I need to get a non-squeaky chair. I'm moving into a new place later on this year, so hopefully I can get a better chair there. Or just get like a shit ton of oil and just like lubricate the hell out of it. Yeah, a bunch of that WD-40. Things are so handy because they come with like the really small red tube, which you can basically just spray like very specifically into the joint. Man, I love WD-40. It was a good weekend. Kind of just had a couple friends over for dinner, and then just kind of relaxed a little bit. It's pretty poor weather in the UK. I'm not gonna lie. I was out at the gym just like half an hour ago, and like the walk back was just so windy. You could barely stand. Like I don't understand how there is that much wind. But it's not like it was cold either. It's just wind. I think it was colder last week. Now it's starting to warm up again, I think. I mean, we are approaching February, so yeah, I did a bit of back, a bit of legs. Oh yeah. Yeah, I think the snow this year in like, places where it actually does snow has been absolutely nuts. Yeah, I think Don was saying like his car was absolutely frozen when he tried to get in. But yeah, well, welcome back, guys. Hope everybody had a good weekend. Relaxing, right? Hopefully nobody has too much FOMO when coming back to the charts. Understanding that it's just another day, nothing has happened, right? Your weekend is just a bit of a break from gold, and it's a good thing. We don't want to be staring at the charts 24/7. Like we're only here. Treat it as just a needs be basis, right? If you need to be here for like a certain period of time for Monday to Friday when the market's open, that's good, right? But for the other times when you don't need to be here, then don't. especially the weekends. We're gonna get started in about 5 minutes here. I realized I've started to start streaming relatively earlier on, but I think the amount of people who actually join towards the end of the stream actually increases by quite a lot. So who knows? But I don't want to keep it too late. This is good. Let's remove everything. And we'll get started relatively soon. Always start with the monthly, right? So just keep the monthly chart here for now. That's good. Yeah, I think that's definitely a good mindset to have, Creed. But the issue is like, definitely me, right? Me as well. When I was starting off trading, I mean, like I haven't been trading for too long, right? It's nearly a year, like 10 months now. But when I first started off, I remember I was like on the charts every single minute that I could be. Because it's just like you think like, logically speaking, oh, if I just, find out exactly how the charts work, how the candles print, how the market moves, then I should be able to, do some pretty accurate back testing, which means I should be able to, replicate that going forward and all of that stuff, right? That's what you think. I mean, only a certain amount of back testing actually helps you. After a while, it kind of just stops. Because your strategy might work, right? The plays you're looking for, the entries you're taking, they may work, right? But the issue is you're not taking those trades live. You're not seeing your plays, right? You're not seeing your entries and setups happen live on the charts. And when that happens, right, you miss out on a very crucial factor, which is probably most of trading, I would say, which is like the kind of psychological side of things. And that links in quite well with what we're trying to break down today, which is a psychological stream, I would say. We call it Psychology Sunday, and we try to welcome a few more psychology-based questions. But yeah, hope everybody's doing well. Starting soon. Hope everybody's mainly feeling refreshed. Right? The worst thing you can do, like, is come back on a Monday or a Sunday night if you're trading Sunday night, and then just feel like, oh, I'm just not ready for the week, right? Or you just don't have that, night of good sleep. You haven't really been kind of like sleeping properly over the weekend, or you've been like, you have a hangover or whatever it is, and that's going to affect you and your analysis on Monday. And when that happens, that's when it gets a little bit more difficult, right? Because you want to be, really switched on when you do your breakdowns. Yeah, exactly, right? Back in the day, I'd literally trade all 3 sessions. I would get up for London, which is I'm in London, right? So I'd get up for London. I would trade Asian, which is like up to like 2:30, 3 a.m. And then get up for London, trade that, and then also trade the entire of New York, even until basically market is like closed, right? Or like not really closed, right? Not like the weekend closed, but for the day, there's just absolutely no volume left, and it's just trickling. And I still tried to trade that. But over time, you just kind of understand, like, if you're getting a trade every day, like Don's been trading every single day, right? We've been catching trades every single day, mostly. Right? I don't think we had a trade on Thursday, but that's enough. Why do you want to catch 30 trades in a day? You have to really ask yourself that. Like, are you trying to catch 30 trades because, oh, like, I want money, right? Is that the reason? Or is it 30 trades a day because I really want to understand how the strategy works and all of that stuff, right? It really comes down to like, what are your base emotions? And that's the kind of psychological barrier you have to get through yourself. Yeah, I would say you could look for a lot of trades to add data, but the issue is then how much, like for example, if you're looking at one trade setup a day versus say 20 trade setups a day, what is the quality distribution of those trades? How much of that data is good data? But cool guys, I'm gonna get started here. We have 28 people on a 10:15 p.m. evening on a Sunday. So let's get started here, yeah? Alright, so welcome back everybody. Hope, again, everybody had a good weekend. I'm gonna just draw up the same two lines we have for the entire of January. Around 2075, I would say this overall range is 2076, 2070. Let me get 5. Let me see it. Yeah, there we go. 2075, right? And then down to around 1991. That's our overall, I would say, monthly range that we're in, right? We have these wicks going all the way up towards 2075. You haven't broken above 2075 ever on the monthly, right? These candles, you didn't close above 2075, but you closed above your overall range and your most recent range, which is around 1991. So you're expecting a pretty heavy drive to continue up, right? Just based off of price action, and you get a breakout after getting some liquidity, break of the lows to continue back up. So you're expecting a push, right? But I think we haven't got that overall closure above 2075 yet, which is going to indicate to us that we're going to start filling the next range up, which is from here all the way up to this area, which is around 2150, right? So if we're not too sure if we're able to fill that entire range yet. So what are we going to need to see? Ideally, right, we're going to need to see closures. Closures on the monthly obviously happen once every month, right? But overall, what is that going to look like? That's going to look like a candle potentially above the range. And now you have to ask yourself, so where am I expecting this bottom wick? We can't look left because there's never been a closure above 2075 anyways, let alone, many closures above 1991. But your last time, if we're looking left in terms of like the smaller time frame candles and all of that, we can understand that most of the time we see a breakout, we see some sort of steep bottom wick to continue up. That steep bottom wick indicates liquidity, number one. Number two, it tells us that is price rejecting the continuation of the bearish bias, right? Because on the smaller time frame, say the 5, 15, 30, you'll see that as price is pushing down, you have that kind of overall structure to come down, right? Unless it's news or whatever, but you typically have some bearish structure to continue down. But on the higher time frame, those ranges, as you're coming down, they're just wicks. And those wicks are basically liquidity for us to continue retesting the highs, right? So where are we expecting it? Not a clue, right? But ideally, we get some sort of breakout above and hopefully some tap into around 1991. So does that have to happen this month? No, right? Because for this month's candle, we don't even know if we're going to flip. As it's currently printing, we're still bearish, right? This month we've come down, we've rebroken the lows, and now we've just retraced to continue up, right? But are we going to really continue up, or are we going to continue back down? So we don't know that yet, right? So wait for a couple more candles to print, right? On the weeklies, maybe the daily, right? But overall, your monthly, you have two sort of concepts you have to have in your mind. Overall, we're bullish, right? Last month's candle, which is I think December's candle, right? We closed above most recent, which is around here, right? Around 2030, so it's various, right? Cool. And then after that, we have a top wick to fill at 2150, right? So if we have that overall goal in terms of our bullish bias, then this could be the liquidity we're looking for to continue to flip and retest those highs. Because if we're overall bullish at the moment, we're expecting this candle to flip, right? And flip doesn't mean we're necessarily going to retest the highs immediately, right? The flip could be us starting to break out of this range, and then for next month's candle maybe we get a re-break of these lows, and then the flip to re-break the highs for next month, which is February, and then after that we'll probably see a retest of 2150, right? So that's what we're overall looking for. So we're still bullish for the month, but we're understanding that during this candle, for this monthly candle, we've come down to re-break the lows multiple times. So is the most recent retracement just liquidity for us to continue down, right? So you have to be asking yourself that. But cool, that is the monthly overall. We're understanding what kind of is happening around there. Weekly, we have a closure on the weekly. All right, I have a pretty nice closure on the weekly, I would say. Overall, I'd put my area at around, yeah, like here's not bad, at around 2017. Why? Just because overall you have a range, either it's around like here, or like somewhere around here. But where it's clearest for me is above here, right? Understanding that, okay, last time you closed above here, you filled this range, right? Last time you closed above here, you filled the range up to here as well, right? So these are the only two times we kind of really closed above, besides this where we just straight up cleared, right? So overall, we've closed respecting now. Closing respecting 2017 on the weekly. So is that a rejection, right? Because we rebroke the lows towards the end of the week. Is this a rejection? Right, we don't know, but because we've closed respecting this level overall, I'd say there's a high chance that price is respecting this overall range, right? This overall range. You could say you're in a range here. I would say for the week, right? This is the weekly range. There's a high chance that because you're respecting the range, you may see next week's candle fill the range, right? To continue up. So maybe for next week, we'll see this, right? A continuation up. But where is the bottom wick going to be? Again, we don't know. For us to get into potential positions, we probably want to see a relatively steep bottom wick. Somewhere around these areas would be great. If it breaks this low and then continues up, that'd be even better, right? Because that reconfirms to us that you've broken the lows, you didn't drive down, you start breaking some highs around here, you have a pretty nice range to fill from 2060 up to 2075, which is 150 pips. All right, so it doesn't mean that, okay, I can't take any trades within this area, but it means that once we do break above 2060, we have very clean range to drive up. All right, you have basically like a very high chance in terms of your setups and your entries to get runners from 2060 to around 2075. All right, because then you can also, if you want, you can hold up to these areas, but I'd like to see an overall breakout above 2075 first in that case. All right, but overall, that's what we're expecting for this week if we've closed respecting, right? Again, it really depends on how this next week's candle opens, because if we come up first, that could be us grabbing liquidity before we're able to come down, right? So in the case that we start coming down, then price might look like this, right? If we start coming up first, and we re-break these highs, maybe it's happened to like towards around these sorts of areas, like 2068 sorts of areas, and then flip bearish, right? Then cool, we could be looking for potential runners to continue down towards the next sorts of areas of support, which is down towards around 1965 sorts of areas, I would say. So generally, right, it depends on what is happening. We're open to both buys and sells, but overall, we understand that we've closed bearish, number one. Number two, we've closed bearish respecting the range. So any given point, this could be price potentially rejecting, right? But for us to confirm it's not a rejection and price just wants to continue down, we need to see a break of the highs and then a re-break of these lows, and then we can potentially get into some pretty clear positions to continue down, right? Because if you're going to re-break the highs but you don't continue up, then that just shows you that you want to start breaking. And once you get the breakout out of this range, maybe on the daily or whatever, or maybe on the weekly, then you can start to take price down, right? So if price for the weeks to come looks something like this, where you have, let's say, a bullish closure, something that looks relatively small like this, re-breaks the highs, does something like that, next week's candle closes below like this, then cool, we'll look to take potentially top wicks, re-break of the lows, down towards around these areas, right? And why have I drawn it like this is quite crucial, right? So number one, we've created a top wick towards around this area. Because last time price tapped into around 2068 sorts of areas before you were able to start driving down, right? So if that's what we're expecting, right? If price does want to get a closure below, right? Either we get the tap into the level before we close, or we tap into the level after we close. So either this happens here and it doesn't close, and then we get something like this where we have a breakout below, taps, and then continues down. In that case, cool, we can also get into that position. But if not, essentially we're looking for this level to get tapped regardless, right? But again, the crucial part is at the moment the weekly has closed respecting a level. So if you want to get those bearish biases to continue down, I'd probably want to see a closure for that level of confirmation, at least on the weekly, right? But again, we don't trade the weekly or the monthly because we're scalpers, right? So let's go to the daily. Let's have a look at where we're at on the daily. So daily. Let's mark up some ranges on the daily. Say overall, this is our range. And then you have some more range going up to here, I would say. Just pretty clean. Pretty clean range. Okay, so overall, why have I marked it up just generally these three lines, right? I've been getting some more level questions, so I'm just going to start, answering, just going through levels as well. So firstly, 2016, that was our weekly level, right? 2016, 2017, that was also, I think, not a monthly level, but weekly and daily. It seems to be okay, right? You have these candles respecting these sorts of areas. You have wick rejections. You have, support and resistance towards around 2016. All right, 326 sorts of areas. It's fine. All right. Then around 2030 sorts of areas, you have, rejections here, support and resistance going through. You have wick rejections here. Once you break through, every time you break through, you fill the next range up. Even this one, you fill the next range up. Next range up is towards around 2048, right? Or around this overall range between 2046, 2048. Because you filled the range, right? You filled the range. In this case, you broke above, you filled the next range. You haven't broken above, and then you rejected here, you rejected here, rejected here. Well, these times you failed to break above, rejected. So overall, these are the kind of daily ranges that I'm playing. All right, so I'm understanding that number one, we've closed respecting 2030. So my overall range at the moment is here. All right, so if we're in between 2016 and 2030, you have to think about, okay, so how has daily closed? What is it looking like, and how do we compare that to the weekly and the monthly, right? So if we're understanding that the overall weekly bias is we're bearish, right, but respecting a level, then a lot of stuff can happen, right? Because we could get the wick fill, but we probably need to see a confirmation that price re-break the highs and then continue down, right? So as that's happening, our daily candle bias is still bullish, but again, we're respecting the range, right? The range is at 2030. So at any given point, price can reject exactly how all of these candles here rejected, right? So look at this, right? You reject, you fail to break above, here you fail to break above, and you start coming down, right? You tapped into these areas, tapped into these areas, tapped to these areas, and you started rejecting. So where are you going to reject, right? That's the question I'm asking, right? So even if I want to get buys, what am I going to need to see? All right, probably going to need to see a re-break of some lows around here, right? These sorts of lows. And then once we re-break some of this highs, then cool, we can look to take price up to the next range, which is 2047, right? Because that makes sense. But if I'm looking for sells, then what am I going to need to see? Again, we've already tapped into certain levels, right? So, for example, once we kind of close respecting these again, we tapped into around this sort of area here. So if price were to come up, grab more top wicks around these sorts of areas and then flip bearish like this candle here, then yeah, cool, we can look to mirror that. And what will that be, right? Because if we're in this range, there's a high chance that price is going to do this in this range, right? Range in the range. And in that case, what we can look to take is potentially price coming up, flipping, and then filling the range down. So potentially below here, and you have some pretty nice range, 2020 to 2016 at least. And then that may be the start of your bearish bias for the weekly to continue down, right? So if that's our overall thinking at the moment, let's have a look to see what the 4 hour looks like. Hopefully everybody's still with me at the moment. Today's analysis, I would say, when I first looked at price, I think earlier today, like just skimmed price really quickly, like 5 minutes or whatever, I was like, what is going on? No idea, because your daily had no bottom wick previously, no top wick, and then you kind of pushed up. Is this a rejection? I was like, okay, I'm going to need to do my actual analysis before anything can happen, right? But at the moment, it's looking relatively clear. But cool. I would say overall, 2030 is also a 4-hour level. Why? Because look at these. You have rejections here, rejections here. These times were coming up, right? Coming up to these areas. You have, support here, resistance here. You had a fake out here. So is this also a fake out to come down, right? Because you have a 4-hour closure back into the range, right? Because even if you put this down here, like at the very tip, this is a 4-hour closure back into the range and potentially accelerate, right? So last time that happened, look at this, right? Look at potentially some of this here. Right, look at, again, once you get a closure back into the range, I'm looking at where you tapped into before you were able to come down. Right, so I would say mainly, you also have this kind of, I would say this, right? You broke back into the range, top wick around 2036 maybe. In these cases, you also had around 2036. You broke below, you came all the way up to 2041. You've already tapped into around 2039 sorts of areas. So is that going to happen? We don't know, right? But I'm expecting a top wick, right? Because I can't just take. Firstly, this is a weekly candle which will open relatively soon. I'm expecting a top wick and a bottom wick for the weekly candle because it has 5 trading days to actually produce one, right? So in all of those days, I'm expecting at least a bit of a top wick or a bit of a bottom wick, right? We also didn't close below any below or above any levels. We're just in the same range. So in that case, I'm not expecting a very aggro week. Right, I'm expecting the overall action for price to be mostly in this range until we get breakouts below or above, right? So in that case, overall, I am still expecting a top wick if we need liquidity to continue down. Where is the liquidity point? Let's do what Don does, right? Let's do some connect the dots, right? So I would say overall we're bearish to come down. We broke the lows. We just had a massive rejection, but doesn't mean that's it, right? So overall, I'd say before we want to continue to break below these sorts of areas, where do we grab liquidity? I would say it is around here. So we've tapped into this area already, I would say, around here, right? So if we want to continue down, where are we looking for liquidity? I'm looking at potentially some top wicks around here. Right, I'm looking at top wicks around here. Do we have any more data? Below, around 2029, 2030. This is okay. 24/7 is just basically a fill of the range. All right, cool. Basically, those are I would say the main two I'm currently looking at. It's basically overall you're within this range here that I'm looking for price to tap, right? Anywhere within there. So I'm looking for top wicks around there. Am I gonna take a wick entry? No, right? Also, just notice, right? So I've highlighted this zone just based off of where the top wicks were to continue down. What is that? What does that look like in terms of where our current candle is sitting? 4-hour no top wick. So it's going to create potentially a 4-hour top wick before we're able to drive down, right? So in the case that price does drive down, we'll see this. And then potentially a fill of the range after a top wick. So it just so happens the lines that we just drew, the box that we just drew, happen to be the top wick area for the last 4-hour candle. All right, and that for us would indicate that, okay, if price wants to continue up, it probably would from this point onwards continue to drive up to fill 2047. If it doesn't, but comes back down, breaks some of these lows, right? We probably could get into some positions if it taps into these areas around 2027, 2026, 5 sorts of areas. Break even point towards around 2024, or maybe even I would say around this wick here, right? So around 2025. So that's like 12, 13 pips. And then after that, probably more closes around 2024 and then runners towards 2016. Pretty clear, right? Overall. But again, what are we going to need to see? We're going to need to see that top wick, right? And there's a high chance you're not going to get this trade. Why? Because the weekly's just opened, right? The daily's just opened. There's a high chance that the daily and the weekly are going to create much steeper top wicks as you could continue up, right? And if you don't, right, you could see the daily close something like bearish, like this, which would be fine. with a top wick, let's say not quite up into that area, but it doesn't really drive, that's fine. All right. And then your next daily probably would come up, grab liquidity, and then continue down. And in that case, cool. We'll look to take that position. So it could be a no trade Monday, right? But then once we do tap into this level, whenever that happens, high chance we'll be able to get into trades because then the daily is going to be moving, higher time frame is going to be moving, so we can get into those smaller time frame trades, right? Okay, so buys. Let's look at, can we get buys even? What am I going to need to see? At the moment, higher time frames are not looking too good for buys, mainly because your 4-hour has closed below again. I would say your hourly also has been respecting this level overall. It's difficult to get buys. The only way I could get buys is probably if I get a breakout above 2035, right? Overall. But again, I'll need it to re-break some of these lows at around like, to be honest, I'll probably need it to tap into this area here, below here. Right, because I'm understanding that if you want to reject, right, if price continues to come down to these areas, there's no reason, all right, for price to come down to these areas, fill the entire range at 2016, and if you don't break out, right, if you fake out whatever, then come back up, break above 2035, or maybe at that point, maybe even 2030, then yeah, maybe we can look to take some trades to continue up. But those are the kind of two areas I would ideally see price tap in the near future, which is just anywhere within this box or anywhere within this box, I would say. So let's extend that over. So why am I expecting that? Because last time price really wanted to continue driving up, right? Look left, price drove up here, couldn't break above here, tapped into these sorts of areas at 2016, then cool, you're able to get that drive, right? At this point, you haven't even filled in 2047 yet. So when you are coming back up, is this enough liquidity for us to continue driving? Cool. If it is, that's fine. Then we'll see a complete fill of the range towards 2747 and we'll do nothing, right? I'll just watch price drive up to there. That's completely fine, right? Because if that doesn't align for me, if the daily has no bottom wick, the weekly has no bottom wick, there's nothing I can do. But I'm expecting if we're going to mirror this kind of price action here, price will come back down to grab liquidity. And when that happens, and then you get a re-break at the highs, yeah, cool. I'll look to grab liquidity. I'll look for liquidity grab around these areas, and then I'll look for potential entries and positions to continue breaking above, maybe, or potentially wick entries if it's showing me cool signs like this, right? You're respecting this range here, no bottom wick, and you just kind of come down first. But I guess there's another thing that may affect price, which is news. Let's look at news. Obviously, Sunday there should be no news. We have one yellow folder on Monday, so not really anything. Richmond manufacturing, not really anything. No more US folders. Oh, we have flash okay. So Wednesday might be quite volatile. What about Thursday? Thursday is pretty big. You have unemployment claims on Thursday. Friday, okay. Yeah, so you have some news. Wednesday after Wednesday, you know Wednesday, Thursday, Friday, you have a little bit of news. But overall, that, I mean, what could that mean, right? It could mean that for Monday, Tuesday, the actual price action that you see may not be the actual direction that price will go towards the end of the week, right? So how would that kind of line up with all of our analysis? Could be the top wick for us to start, you know, creating liquidity, for us to start driving down after news, with that overall bearish bias on the weekly, right? But if our overall monthly bias is still bullish, we could be expecting a bottom wick for this next week's candle, and this could be the beginning of price retracing, right? Because now that we're respecting this overall range here, what price could do in terms of bullish action is close very bullish like this above the range after a bottom wick, right? And then that would be above 2075 sorts of areas, right? So if that happens, that'll be fine as well. But, you know, you need to see that overall liquidity happening. And by this point, price would also be breaking above on the monthly, right? And as that's happening, if you get a closure on the monthly like this, closure on the weekly like this, closure on the daily above 2075, then you have pretty clean range to continue going up, right? And it's a pretty straightforward trade. Does that make sense overall? So overall analysis. Can I put any lines? Not really. There's no sells or buys like at the moment. You know how Don always says like, are we hunting? Are we not hunting? At this point, nobody should be hunting. Especially because at the moment we're at pre-Asian session, no volume, right? Number two, we don't even like prices actually opening up for the week. We don't know the direction, right? And number three, like the higher time frame levels that we're expecting to tap have not been tapped, so there's nothing I can do. I'll just watch price until it drives up to this area, and then I'll reevaluate. Can I get into a trade? If I can, then cool. I'll look for potential positions. But if I can't, then yeah, I'll just watch price drive until the next area where I can start hunting, which is likely if it continues to drive up, probably somewhere around this box. Right? That's where I'd be looking next. But that's yet to come. But yeah, that's the overall analysis, guys. Again, today is Psychology Sunday, so we are welcoming more psychology-based questions, but let's see what the Zoom has to say.
Good evening.
Hello.
Hello.
Are you in Germany?
No, actually, I moved from Germany to Sweden around 2 years ago.
Oh, nice. What time is it in Sweden at the moment?
1 hour before, so we have almost 12 or midnight.
Oh, okay. 20 minutes
Yeah.
till midnight around.
Yes.
I see.
Why do you ask? Or how did you see?
No, I'm just wondering because like I know it's quite late for everybody who's in like Europe,
Alright.
but because like everybody who's in like North America, that sorts of area, they're quite I think
Kinda
it's like
easy for them.
midday. It's like just after noon or no, like probably late afternoon for them at the moment, which is fine.
Yeah. I mean, New York is 6 hours from here, I think, if I'm correct.
Yeah, something like
Around
that. Yeah.
Yeah. How was your weekend?
Yeah, pretty chilled.
Pretty chill.
I need to find more like TV series to watch, but it's good. Got a little bit of work done. You had a look at that overall that spreadsheet as well, which is good. I saw your comment. I'll probably add some. Like that's the thing. Like I want you guys to contribute towards that as well.
100%.
So hopefully it was relatively helpful.
Yeah, I actually might consider reading a second time through it. Because first time, like sometimes you just fly over and just
Yeah.
like try to take it in, but then second time you really take it in, maybe find more stuff.
Yeah.
But that was my part on what I found, what maybe could be added, maybe not. But
Yeah,
that's
yeah,
up
yeah,
to
yeah.
you, of course.
I'll probably change you guys to actually like commenters, so you can like comment on like each of the cells individually, because then you guys can add like your personal like feelings as you continued past each stage or whatever, which will be interesting as well.
Yeah, surely.
Yeah. But aren't bigger time frames just an average of smaller time frames? So I would say every single time frame has it's not like an average of any other time frame. It's kind of like it tells a bigger picture in terms of the story, right? So for example, you have like four 15-minute candles in an hourly candle, right? So how your first 15-minute opens and how your last 15-minute ends will dictate exactly how the 1 hour looks, right? Then you have the wicks, the highs and the lows. But overall, it's not like it's an average. It still shows like an overall picture of where price wants to go. So each candle that gets printed, 1 minute, 5 minute, or whatever, all the way up to the monthly, shows exactly like, oh, is it closing above or below that time frame's range? And if it is, then there's a high chance for that time frame to show us some level of indication that it's going to continue in that direction, right? But then we want for us to take a position because say the 4 hour closes below. It doesn't mean that it's definitely going to drive down, right? You can get fake outs, you can get a lot of other stuff, which is why we need to incorporate all the other time frames as well. And once we do that, we have the actual picture of, okay, I'm seeing that the 4 hours closed below. I'm seeing that the dailies closed below. Oh, the 1 hour hasn't closed below yet, right? But then everything else is starting to look bearish on the smaller time frames as well. So what am I going to wait for? I'm going to wait for all of those time frames to also close below, right? Below their own ranges as well. And then once that's happening, then yeah, cool. We'll look to get into positions. But it's just about stacking confirmations. Love the analysis, makes so much sense for this week's price action. Yeah, hopefully it'll play out. I mean, regardless of where we need to go, we need some liquidity, right? Overall, we have, like, if we wanted to continue push and this was liquidity for us, you would have seen this at least fill up to 2047, which is why I think the positions we got at around these areas, we held for runners towards around 20, like these areas, but we closed full once we tapped into the kind of these sorts of areas, right, at around 2038. Mainly because, like, you know, if we wanted to grab liquidity, you would have seen bottom wicks as you were coming up, right? But what did you see instead? You see, like, on the hourly, I think we had so many, like, struggling candles around here, right? No bottom wick here, no bottom wick here. And, like, as you're coming up, I think your daily had no, like, 4 hour at that point had no bottom wick or something. Yeah, these, no bottom wick really, no bottom wick here. So it was difficult, right? If you really truly had direction and liquidity, then yeah, we would have held that to the moon, but unfortunately not. If we keep inside the high low of Friday and expect a larger move on the Wednesday, yeah. I mean, it depends. If you range for a while, then maybe news will break us out, and then once that happens, could get a pretty aggressive push, right? Which time frame is best to mark the level? I typically just look towards 4 hour, 1 hour, but it depends which one is clearer for the day. So, for example, right, if I'm on the 1 hour at the moment, there's a lot of noise in this area. So where's my level? I know that my most recent level is around, I would say, here, right? But just looking left, I guess it does overall make sense here. There's a bit of noise here. It's not too clean. Here it's not too clean. Here it's pretty clean, right? Here it's really clean. Here again, there's a bit of mess there. Looking further left, do we have any information? It's also pretty disgusting here, right? So maybe on those days, hourly is not your friend, right? But then if we go to the 4 hour, what do we see? We see overall that you have a level here, some wicks here. You have some mess here again for the 1 hour as well. But overall, you know, you've seen that every time you've closed above this area, you've filled up to these areas, which you did. Now you're closing back below. What can we expect, right? So that's overall, I would say, how you should choose which time frame to mark up your ranges at. Right? It depends. It depends which hour or which time frame is the cleanest for you. Right?
So is it basically to make it easier for your brain? You would
Yeah,
say
exactly, exactly.
All right.
Because at the end of the day, it's you doing the analysis, right?
Mhm.
As long as it makes sense for you and you're seeing, oh yeah, like, okay, this is a closure below for me, and then I know that based off of my own analysis, every time I see a closure, there's X percentage chance for us to continue driving, then that is your analysis. So you should mark the levels based off of what makes sense to you. Yeah. Because if you're marking it based off of what's cleanest for me, then my setup and your setup might be different. So then your journal, as you're continuing to trade, it's going to be slightly less accurate.
All right.
Yeah.
Cool.
Also, I'm just realizing this. Let me just go back to before I lose that chart. Yeah, so you know all of this, I'm just staring at, let me delete this. So I'm staring at this. This is a level I'm relatively interested in. Why? Because in terms of price action, we're relatively mirroring this. Right, we continue to break below, failed kind of, right, fake out to come back in, tapped into around 2038 sorts of areas, then you had this wick rejection to come down, similar to this. Where'd you grab the liquidity before you were able to come down? Maybe around these areas. So, I mean, ideally it comes up to this area because you haven't really even tapped down to 2020 yet. But yeah, your 4 hour range currently, I would say, is coming down to 2020, which is why this candle drove down 2020, right? It filled the range. You got a fake out to fill the range, but you couldn't continue breaking below, which is why you came back up, grab more liquidity to continue down, right? So if we're trying to mirror, I think in terms of the best price action, if this was in the middle of the week and your weekly had like a top and bottom wick, we could look to mirror this. But because we, you know, the weekly candle is coming up first, or, you know, coming down first, and we need steeper top wicks, bottom wicks, we can't really look for just this, because at that point your top wick area is only 45 pips, which I mean, it could be that case. But if your daily is so bullish, what's to say that you won't fill the entire wick going up, right? So that's why like at the moment I can't hunt. I need to wait. But 2020 is an interesting level. I would say it's a 4 hour fill of the range, right? You see this wick, all these wicks, 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 wicks. So many promotion for Wix's stream. What is the off the rip entry? There is no off the rip entry. Like at the moment with how prices, there's no off the rip entry. I could tell you like if you really wanted an off the rip entry, probably a breakout above 2088. Yeah, I'd take that off the rip. Because there's no other range to fill besides all the way up to here. But you're a little bit far from it, right?
Elvis, you think there might be a possibility for this year that it happens?
Yeah. I mean, we had
Just
a pretty
feeling maybe.
we had a pretty I mean, if we look at the higher time frame, right? If we're looking past the monthly and we're looking at like 3 months or whatever, like your next closure on the 3 months is April, right? I'm expecting this candle to flip. Right? You had a breakout above. I'm expecting it to flip. 6 months, you're bullish. I'm expecting it to flip. Yearly, I'm expecting it to flip, right? Everything is bullish.
All right.
Yeah?
I see it.
You see it? Yeah.
Because it's creating the bottom wick first, right? On
Yeah, exactly.
the high time frames now.
If you think about it, right? Monthly candle for January, if you look at the overall 3 month candle, then shit, January is just the first part of it. That's 1/3 of the candles, right?
True.
So if that flips in February, then yeah, we're probably going to continue heading up. But it just depends when. Like, we don't try to catch those unless we see like a very good entry for like an overall swing, I would say.
Of course not. Mm-hmm.
But yeah. Oh, as in like what is an off the rip entry? I would say an off the rip entry is basically after we've grabbed liquidity. So let's find an example. So for example, I would say one of these is pretty good. So like this here, well, you had this range here, right? You came up, you were still respecting all this range. You came up, grabbed liquidity, broke all of these highs. You created a high for this 4 hour candle as well, and then you flip bearish to close below the range, which I put as 2030, right? After that, this candle then came back up, created a top wick for us, and then rebroke this low. I would say this is probably an off the rip entry because I'm understanding that the chance of price driving from here at least down to around 2020 is very high. Why? Because firstly, you've already grabbed liquidity, so we don't have to worry about there being no volume for price to push. Secondly, this candle also has a top wick, which means that if price were to continue to drive down, there's a smaller chance that price will continue to drive up to re-break the highs, right? Because you created those highs first, and at that point, your 4 hour candle was looking like this, right? And then once you flip, I'm understanding there's a high chance that price is going to continue down. And then once you re-break this low as well, yeah, you're creating a lower low in terms of structure, right? So in terms of structure, market structure, if you're breaking that low, then this is what price looks like. You come up, come down here, come back up, re-break this low. So what are you expecting? You're expecting a lower low. So that's the highest chance that price is going to drive, even after grabbing liquidity. So high chance you're going to drive down to 2020. And potentially even 2016 for runners. Yeah, it's all logical. None of this, like, when I first started trading, I was like, whoa, like, surely this is all just, people are just lucky, right? There's no way. How can you predict price? And then, like, after a while, it kind of just clicks. How long have you been in this game? I didn't really start too long ago. I'd say 10 months. Trading, like, seriously, like, nine months. But how long am I going to continue? Who knows?
Still just lucky.
Yeah, I'm just lucky in the charts. Don is just lucky 60 times in a row, man. He should buy a lottery ticket. If he risked 50% of his account every single time, he'd be the richest man in the world.
Maybe you should suggest that.
I should. Yeah, I think I should.
Actually, no, you should suggest after he takes that loss that he risks 100% of the account.
Thing
Just
is,
full margin it in.
I had thought about like, what if you take Don's trades, right? But with, say, like 50% risk, right, for your account, but you start at like $50 or whatever, right? So
Yeah.
your overall loss, max loss, is $50, and you just see how many wins he can take and flip the account to fucking oblivion.
Elvis, you're already thinking about it, going in the wrong way.
The thing is, though, like I did think about it ages ago, but then like when you really strip it down, and it kind of comes down to psychology, right? Why am I doing that? Just for the money.
Elvis is doing the secret full margin.
There's
Alright.
no other reason besides the money for it. So
Yeah.
yeah, that's the only reason I would go against it.
The thing is, you need be like a 300 pips worth of for 50% or something.
Yeah.
Because of the way the strategy works. So even if you're doing that,
Yeah, you'd probably make like what, like 5% per trade if you won, right? But still.
maybe a bit less actually.
Yeah. Do you have tips for? Yeah.
I was just thinking about the crazy swing trade Don did in December.
Oh yeah, that was nuts. We
And
got
like
such a good entry.
How sure he was about it, and then with the entry, how good it was.
Yeah, where was the entry? It was like
I'm
down
actually
here.
208 or something?
Oh no, it wasn't down here, was it? It was like around here.
It was 208. It was definitely above 2000.
Oh, was
I
it?
thought. Yeah.
Well, we had that
Okay,
massive
fairly
push, which
quick.
was fucking nuts.
Maybe. Shit, man.
I don't
I'm
know.
unfortunately not in the channel anymore, so otherwise I would.
It was one of these lows essentially, right? And then we kind of just held, and it just started popping. But yeah. I mean, essentially that's why. Like, you mean once you have the analysis locked down, we can see where prices, like, because the analysis on every single time frame is the same, right? So for example, on the monthly, where am I looking for swings? Obviously, at this point, I can't look for swings because I'd expect a steeper bottom wick if price really wanted to start driving up, right? Where is that going to be in terms of price? It's difficult to say, but if price did break this candle, I would like to see potentially this, right? So
Entry was 2010. It said in the chat.
oh yeah, in 20 days, yeah, I mean it's pretty good entry. Down here, so let's say price close respecting overall level here, right? Your next candle comes down first, creates a bottom wick, no top wick for next month's candle, and then comes down towards, like, I don't know, these sorts of areas, or like 19 whatever. Yeah, I'll look for a flip, right? And that'll be our potential swing entries there. But we'll see. Some guy had a psychology. Do you have any tips for emotion control when you're in a trade? Because in some pursuits have the problem of not holding the trade longer or shorting my profit. I would say overall, if you understand why you're in the trade, what you're targeting in terms of the range fill, in terms of like the overall TP, or just you have an idea of where price is likely to go, that is enough for you to remove emotions from the trade. The only other aspect of that is if you've, over-risked potentially. So if you're only mentally or physically prepared to risk 1 or 2%, but you risked 10%, then yeah, you'd be emotional, right? So like if I was only okay to lose $100, right, but then I actually risked 1K on the trade, then it's like, well, once it goes past $100, I'm like, well, fuck, what do I do now, right? Because at any given point, I'm not ready to lose that amount of money. So I think keeping your risk to what your plan is very crucial, number one. Number two is for your entry, your setup, and everything, make sure you have an idea of where price is likely to go, because that is your trade. So let's say we get a breakout below, we have a top wick, I'm putting a sell stop there, then cool, I'm understanding that there's a high chance that if it flips, it's going to fill the wick, number one. Number two, fill the range. So maybe my stop loss, right, is going to be above wherever the candle high is, or above the most recent structure. and then my stop, and then my break even point is probably the wick fill, and then my TP is probably the bottom of the range, right? And in that case, you're understanding where price is going to go, and you're not tying it to money. You're just tying it to how price is moving. And if price goes in your favor, then cool, then your trade was a success. But if price doesn't go in your favor, then it's like, okay, cool. There's some element here that we can learn from. Is price going against us because of certain things? Maybe it didn't grab liquidity, which is why it needed to come up to grab liquidity before it comes down. Or is that just one of those trades which we couldn't have done anything about? Because our win rate is, is less than 100%, like even if it's just marginally less than 100%. But that means there will be trades in some days where price will just do something unexpected that we can't predict. And is that our fault? No, because, we can only sample size to the best of our abilities, right? Yeah, but that's what I would say for emotional control. It takes a while. It's definitely not a quick thing. I'd say I actually probably fully understood the entire strategy. Maybe like towards the end of last year, like July, August sorts of times. Like including wick entry, I would say maybe like September, maybe like August, September. And then after that, I think that entire duration, like until now, I would say there's still elements that I have to focus on, right? Like for example, the emotional stuff, like psychology stuff, like greed, FOMO, like a bunch of stuff that I've had to deal with as well, to continue that journey. So it's not like you're not the only one going through all of that, for sure. Yeah, and then like if you're very emotional with it, you'll see like, oh wow, that's $50. Wow, let me get out because that's $50, right? But in the sense of the trade, maybe you've only been up like 2 pips, right? And if that's 2 pips, then it's like, well, you'll see price continue to drive because you're like, if your entry and your stop loss was good, then you'll see it driving because it'll play out in terms of what your analysis was. Yeah, I think to control your emotion through drawdown is literally just being like you understand. Okay, every time you get into a trade, you need to accept that you have either lost money, which is the 1 to 2% or whatever you've risked, or you've made some amount of money, right? Or you've made no money if it's break even. You just have to accept all three scenarios. Yeah. It's difficult because like sometimes if you get a pineapple, then it's like, oh, am I ready to risk another bit? Like, but as long as you're risking properly, that's the main thing. Like if you understand that, oh, sometimes we have pineapples, then cool, that's fine. Like adjust for that, right? There's a high chance that if we do get pineapples, then what we could do is risk slightly less. Oh, we have a monthly open. Sorry, weekly open. And a daily as well. Oh, if we come down first, that's going to be interesting. I mean, this is nothing. 14 pips. We've come down first, though. It's interesting. Oh, yeah, somebody was asking about brokers. Yeah, I have no clue. For a live account, depends where you are, right? Like I'm using Blueberry Markets, but because I'm not in the US, so and I think Blueberry is based in Australia, so it's alright for me.
I think there are some parts to remember when it comes to it, of choosing a broker. As an
Yeah,
example, that it's maybe a regulated broker too.
yeah,
Or at least that is what I'm looking out for. So there's no shady stuff.
yeah. I mean, Blueberry has been very reliable for us, so
Yeah, definitely.
it's been
Yeah,
pretty
I mean,
good.
I've heard Europe is ICC markets and Blueberry is good.
Because like for example, I just trade gold, right? Blueberry has no commission on gold either, so
Oh, they don't have commissions on it.
yeah.
All
Low
right.
spread, no commission.
Yeah, it's the best you can get for a live account.
I'm with Pepperstone. I think also that, I mean, they have very low spread,
Mm.
and I think also no commissions as far as I saw.
Yeah, it's pretty good.
It's usually the ones with raw spread that have commission, right?
Yeah, I think so. Yeah, like when they do like like gold and then like VIP or pro or whatever at the end of it.
Then it's like
Yeah,
$6-7 per lot or something.
yeah. What's
Which
this?
then it's just the same, right? Basically.
Yeah,
It's just
basically,
spread.
yeah. Blueberry spread is like 1.5 pips max, 2 pips max, I would say. Pretty good. You're lacking confidence for this trade. Yeah, like in that case, just wait for everything to align. But it'll take time, right? It'll take time for you to understand what you're actually looking for, right? If you know exactly what you're looking for, then yeah, you can look for that, set up entry and then take that, right? But that's the first thing you need to figure out, right? Like the strategy behind it. What are you looking for? Why are you looking for it? How do you get in? Why did you get in? You have to ask yourself those questions. If you don't understand it, then yeah, you'll be scared as you get into the trade, because there's parts of it you don't fully understand. So you'll ask yourself those questions when you're in the trade. So to prevent all of that, make sure you have answers to all those questions before you get into the trade.
Actually, you brought me now thinking if I should change to blueberry markets. I have compared my spreads right now with market open as an example.
Oh,
and
but market open is always bad on everything.
yeah, no, but still, like, you're 1 pip better on blueberry than on my broker.
Yeah, I mean, have a look at it. It's been pretty good for me, and Don's been using it consistently.
It's also, I mean, mine looks really, I wouldn't maybe say outdated, but if you would see the interface compared to blueberry, you would probably be like, what the fuck?
Really? I just use MT5.
Yeah, no, I mean, like, when you log into the broker on the website.
Oh, okay, I see.
Like, it's, they could do some digitalization on that.
Are they still on like a 2000s website?
Yeah, some type of Windows XP style.
Wow.
Like, I refer all the time to. But I mean, otherwise they're really fast with support. If you have something, payouts are quick and deposits. But of course, that's not the main part. But yeah.
Deposits are always quick.
Yeah. I will actually look a little bit more into it now.
Yeah, fair enough.
Do you have a referral link, Elvis, so you get something?
I don't think maybe. I don't think so.
Because I saw there was someone posting something on a, I think, different server that if you fulfill something with Blueberry, like with 20 people or 10 people signing up, you get something from them also.
I'll have a look. But maybe asking Don is probably better there, because he'll have more people.
Yeah.
I mean, Don does have a link somewhere.
Oh, he has a link then. Yeah, just use it.
I've definitely seen a link for it somewhere.
I can shoot for that. Maybe makes
exactly.
more sense.
It's probably in the description on the YouTube videos.
Probably.
Yeah. I'll ping him. I'll ping a message now.
Mm-hmm.
Let's see.
Yeah, I see. He has it actually in the description.
Oh, you do? Okay, nice.
Yes. All right.
Easy.
I mean, I can anyway sign up. Doesn't matter.
Yeah, I've got 2 live accounts on Blueberry at the moment. One of them is my old $100 account, which I literally traded 0.01, and I continue to copy trades over for 0.01 lots. That's just how that's gonna go for until it gets to, I don't know, 500 or something. If now previous 4-hour comes and breaks lows or something, breaks previous 4-hour lows, no, I don't think so. Because then you could be filling some smaller ranges, right? You're breaking the 4-hour low, which is around here. Say, you have some wick rejections here. You have your overall range, I would say, down to around 2024. So the range you're actually playing All right, so sorry. If it comes down to break the lows and then reflips the highs, you have an issue, right? Because first of all, your daily is closed below a level, right? Your 4 hour has closed back into this range with a celery. Like any given point, even if it flips up, you could see it do something like this, where it comes. You have this candle that looks like this. It comes up. Sorry, comes down first, right? Then comes back up, and then comes back down. So there's a high chance it could do something like this. And in that case, this top wick, right, which is the flip, is not that great. Because you're understanding that overall you've closed back into the range, right? Even if your daily is bullish, and your daily is bullish respecting a range, your weekly is also bearish, right? And you, like most recently as well, you rebroke your lows. So it's difficult to take a buy or a sell right now, I would say.
Elvis, if I may ask.
Yeah, yeah.
Are you running on a funded account at the moment?
Yeah, so I've got a couple.
Okay.
Give me a sec. Yeah, so I think I've got 3 running at the moment. One is funded, and 2 are in evaluation.
Nice.
I think my ACG one is up 3% or something. I think my
Alright.
other, my actual funded one and my evaluation one are down 0.5% or something like that.
Oh, but it's fine.
I was down like 3, no, 2.5, 3%, and then now it's back to it's down 0.5. So I mean, I'm just gonna trade it normally anyways. Like it doesn't matter.
Is it all 100k accounts or?
2 of them are 200. One of them is 100.
Alright. Is FTMO part of one of them?
No. I did. I wanted to look into FTMO, but I just after I got the most recent two fundeds that I'm trying at the moment, I just kind of don't really want to try fundeds anymore.
Yeah.
Because again, there's so many rules and restrictions that go with it, and then once you do win as well, they're like unhappy that you're winning, so they're trying to find ways for you to lose, and it's like
Yeah.
the overall kind of the vibe with them is never a good thing. Like they don't want you to win, I would say.
Yeah. Especially for me, a part is something what I'm looking out in that case is with the payouts.
Yeah.
I know some only do like crypto payouts, and I'm not really a big fan of that.
Yeah, no, I don't really want crypto payouts either.
Because also when it comes to taxes, then so to say, it's quite hard to do because then like I'm like, yeah, I did like, trading and did on a funded account, and then they're like, okay, show us, and then like, okay, what is the payout, and then they need like a receipt from the crypto, and I'm just like, yeah, well.
Yeah, exactly. What lot size do I use from 100k? I'm using like between 1 and 2 lots. You're from the UK, right? No, I'm actually from Hong Kong. But I was born in the US. But I'm just living in the UK. And I have been here for like 14. Oh no, 12 years. Real prop firms want you to win because they make a percentage of the wins. Funded, yeah. I mean, it depends. It just depends what the company is, how legit they are, and like what their actual business model is, right? It just depends. It's hard to say just like, yeah, all fundeds are one thing, all like prop firms are one thing. Like, yeah, it's difficult to put like a blanket statement overall. But essentially, you're trading other people's money, right? A lot of them have a business model where they want you to fail the funded stages, so they make money off of that. But yeah, see you on Don Stream. Thanks for coming up. Where in the UK? I'm in London. So whenever you guys or whoever is coming to the in person, I'll see you guys in London. If you're coming to the in-person course as well, I might be there. Depends on if it's like a weekend or whatever, or if it's like late in the day, then maybe. Mo, are you gonna come? Because Sweden is not too far.
I'm actually planning. So the thing is, also my girlfriend is a stewardess for Scandinavian Airlines.
Oh.
Might have also seen them maybe in London because they actually also quartered there.
Yeah. I definitely have seen the airline. Yeah.
But I basically fly for free. So
Whoa. That is
I was
nuts.
actually I'm really looking forward just when the information comes out, and I was actually planning on coming to London then. Would just be nice to see everyone just in real life and having a good time and vibing together.
Yeah.
And learn a lot. But yeah.
How much is it going to cost to attend the London meeting? So I think Don will release tickets for the actual in-person course, which may be like, I don't know, maybe like 2K or something. USD. I don't know. It was 1.5 last time, but there's a lot more stuff that's going to go into it this time, I think. Who knows? And then you'll have to get your own flights. You'll have to get your own, accommodation and all that. You're in Lancashire? 5 hours, man. But the trains in UK are fucked, man.
You should see Germany.
Really? Are the trains there bad?
Oh, it's hell. It's hell.
Really? Okay.
Like if it's too hot, it's insane, and if it's too cold, it's insane. And in between, it's like a mixture. Some days are good, some days are bad.
I was in like Berlin like a couple of years ago, and I think the trains they ran till like quite late as well.
I mean, they usually drive through the whole night, just at some point, just once an hour, and it's usually not the trains within the cities.
Oh yeah,
It's
just
what,
yeah.
like the German train company, so to say. So if you go a long distance, that is so broken or like bad.
Yeah, fair enough. Can I increase my voice? I mean, I'm trying my best. I don't want to scream into the mic, but the mic is like I'm like 2 centimeters away from the mic. I don't think I can get any unless like I put the mic in my mouth, which I don't think is a good idea. Going to Prague? That should be pretty nice. I think like trains going out or like international trains are usually pretty good.
That's something else. That's good.
Yeah. I think it's just like when, for example, like in London, you have like trains which connect to like different cities in the UK, and those you have like train strikes, you have like just people who don't want to work and then they delay the trains, and then after that you just kind of get either cancellations when you have to wait like hours for your, well, not hours, like a decent amount of time on your train, or the train you're already on the train and you try to get to your destination and you're just delayed by like an hour and you're just on the train. I think the worst was one of my mates were stuck. Well, I think he was stuck there for like 3 hours just on the train, and like there was nothing he could do.
I got on one once, and someone said that the train had been sat there for 4 hours at the station.
Yeah, man, it's just not like why.
They said a train had broken down on the track somewhere, and it like were incapable of moving it.
But that's just like, surely you design something into that train which lets you manually drive it away when something like this happens. Like, surely there's some contingency that goes into that.
I mean, you would think, but
Yeah, honestly, you would.
Most of the line was built in, Victorian times.
That's true.
Which is part of the problem.
Thing is, I'm also going to Japan in May. I've been like many times, but they have like apology letters sent to you by email if they're
works.
Really?
yeah if they're late by like 2 minutes, I think, or like 3 minutes, they send you apology letters.
Holy shit.
And it's not even a train, it's like just like your underground. It's insane because they're never late.
Oh yeah, I think I also saw a documentary about that. That they're so insane with the timings.
They're so insane. Like it means that like when you actually go on like Google Maps or whatever and you try to go somewhere else, it is like an actually accurate time.
It's like yeah, you arrive there at that time, and it's actually exactly that time.
Yeah.
I'm not driving in Japan, according to Google Maps, is often too ambitious.
Yeah, there's
There's
a
so
lot
many,
of cars.
There's so many traffic lights everywhere.
Yeah, there's so many people as well.
Was
I think
were
once
in
you leave
Japan
Tokyo,
before?
it's okay.
Oh sorry.
What was that?
No, I said were you in Japan before?
Oh yeah, I've been like 30 times, 30 something. Maybe like close to 40 times now.
Holy shit, alright. Because we were also looking, me and my girlfriend, to go to Japan this
Do you get
year.
free flights to go to Japan as well?
Yes.
What the fuck? Wait, how can I get
Huh?
these free flights? How?
I mean, it's not really free to be fair, but she gets like employer discount on the whole Star Alliance.
What the
Oh
hell?
shit.
So,
so
we can
weird.
also take like whatever airline you can think of that is within the Star Alliance, and it's like 85% discount.
85%.
May as well just fly direct business class.
Yeah, and that is the thing that also applies to business class.
Every flight, I'd be direct flight business class.
What the hell, man? Wait, so I'm pretty sure like British Airways is a part of that.
Yes, it is.
Man, next time can I get you to pay for my flights and I'll pay you back? Bro.
Well, the thing is, you
That's nuts.
kind of need like it can actually work, but then we need to be present.
Yeah, I know. No, there's a lot of issues with that. If we get caught, it's really bad for your girlfriend. So.
No, it's fine. She can take up to 8 people.
Oh my god. That's such a perk of having like a stewardess as your
So
girlfriend.
I'll see you in Japan or what? In Japan or what?
Hell yeah.
No, that is also why I wanted to ask when you go in May, because we were actually looking for May, June to go.
Yeah, I've already booked everything, so
Alright,
yeah.
all good.
I'm going with one
But I mean-
friend from the UK.
If something comes up in the future,
Yeah, man. For sure, for sure. Definitely come to London. If you have 85% off, like there's no reason not to come to London, to be honest.
yeah.
Yeah. If Dawn
My
comes to
dad was
America,
like,
yeah.
no, my dad was like, yeah, in worst case, if she's not letting you fly, just go with Ryanair. And I'm just like, yeah.
Yeah, Ryanair's okay as well.
Yeah,
It's
you
just
get
really
a-
bad for like a couple hours and you're fine.
Yeah,
It's
and on
cheaper than the train though.
It's
It
so
is
much
actually.
cheaper than a train. Like I think previously, like you could fly to Spain for like £30.
Oh, you saw that news article come back up.
Which one?
It was I think the thing you're referring to is a news article from like 7 years ago. It circulated again.
Oh, did it? Oh,
This
yeah,
week,
probably something
yeah.
like that. Yeah.
It was
And you
like
get it.
flights to Spain there and back for 2 people was cheaper than like a train to go see each other, and it was 100 miles apart in the UK or something.
Yeah, it's ridiculous.
So they're like, let's go on holiday in Spain because it's a bit cheaper for the weekend.
Yeah.
To spend time together.
It's absolutely nuts.
and you get a free spine correction on landing.
Yeah, man. There's
At
some.
least from my experience when flying with them. But actually, if you understand why they do it, it's actually for the aircraft they're using. They need to actually land that hard because it's safer than landing soft.
I guess because the aircraft is so light.
Yeah, and it can like, I don't know, something like that. It can bounce off really easy and then get into wind shear or whatever it's called, and yeah, I don't know.
Fair enough. Fair enough. If Dom comes to America, I may see him. I mean, he was in the US last year. We did the in-person in Miami last year. And Wix was there as well. I was smoking with him and Reza. And Don's girlfriend as well. But I don't think he's going to do another in-person in the US for a while. I think it's going to be London, and the next one, I don't know where that's going to be.
He's gonna go see Yanez or something.
Oh, I don't think Yanez is so far away. Like the flights to go to see Yanez, like even from London, right? It's around 24 hours. Because you have to take two, like from London, you probably have to take 2 flights, right? Either you stop over in Singapore or you stop over in like Hong Kong or something. And it's like 12 hours each.
When you, Singapore or like Dubai or something.
Yeah, Dubai or like either one of those, yeah. Because I went to New Zealand not long ago, and that was like a 24-hour flight, basically.
Johnny, are you from Australia?
No, UK.
UK, alright.
Yeah.
Can you explain when a candle does a candle fill, a wick fill? Yeah, so for example, let's have a look. Where do we see a wick fill? Yeah, so I mean this, right? These two candles, this red one and this red one, right? So for example, you came down. A wick fill is just a range fill on the smaller time frame because your range is like this, right? That's what we typically say is a range. But as you're creating range during a push, right, you have a range which is like this, right? So in that case, what your range fill is just this. So for example, if your candle closures in this case, they're looking like this, right? You have a candle closure like this because you retraced back up to here, but you have a wick down to here. Then cool, your next candle probably has like a top wick or whatever, comes down, fills the wick because you're in a bearish momentum, and then you close somewhere like here, right? Because you have some sort of retracement. And that's your wick fill, right? Because once you break this low, right, you're creating a lower low and you're expecting that price is going to come down to continue to break this low because you're in a lower, like a bearish sort of market structure. So you can see at least probably the wick fill, you can go break even, and once you break there, you're in this part of the push, right? So overall, you're understanding that, the wick fill is likely because this is the next range that it's going to fill if you're in that overall bias. And in this case is what happened, right? So we saw this multiple times here where you came down, came up, filled the wick, continued to break the wick, came down, created a wick as you can retraced, came up, you filled the wick down, right? Continued, you created a steep wick, came up, retraced, filled the wick, and then continued down. So that's just bearish structure, right? If I just move this over here, that's just bearish structure. So it's the same thing. Hope that makes sense. Getting a lot of comments there. Like, why didn't this fill? Okay, yeah, so when you don't get wick fills is when you potentially are looking at, does price continue to have liquidity as you're continuing to push, right? So for example, if we're looking at, this continue going up, you have no bottom wick here, no bottom wick here. As you're coming up to these areas, you have no bottom wick. So what is that, right? So as you're coming up, you're just doing this, where you create this, you have a very small grab doing something like this. At some point, you're going to run out, right? Because you're not creating that structure to continue up. In terms of some of these candles, some of them, if you have no bottom wick at all, you're just doing this. So at some point, you're going to retrace, right? So if you're going to do that, you're going to do that to come down. So when that kind of happens as you're pushing up, this is why we can't get into the buys when it's just pushing up really aggressively like that. And it has like some form of really small structure, because at any given point, you can see this retracement to come down because you need liquidity if you want to continue pushing up. So what we'd rather wait for is probably the liquidity to be grabbed, and then as you then re-break the high, then yeah, we'll look for that re-break of the highs to continue up. Make sense? Yeah, nice. I think we've been averaging around 60 people for the session, but like everybody starts coming at around like 11 p.m. which is fine. Nothing wrong with coming at 11 p.m. It's just you might miss the analysis. No biggie. I would actually say like does this time kind of work for you? Like if we start like 15, 30 minutes earlier, where it's a little bit more of like a chat for like the first 5, 10, and then we start breaking price down at like 10, 15, or for Mo it's probably gonna be 11, 15.
That's cool with me.
Because it'll be earlier for you, right?
Doesn't matter, but I just adjust to you.
Okay.
It usually works. I mean, if you be helpful if you added
The group to say like when
each time, yeah, when you post the Zoom link.
Yeah.
Is the
Yeah, I'll probably start doing that actually.
Oh, you mean like notification-wise, Johnny?
Yeah.
Yeah. Gotcha.
Just because otherwise I like check periodically and then sometimes.
Yeah. Fair.
10 minutes in. Yeah.
Depends if you have an early shift in your work. Yeah, I think so. So this time, this like 10 to 11 p.m. right, London is not the best, I would say, in terms of like time of day for people to kind of join up the streams, which is why I never really expected too many people. But you know, like if in London, in the UK, it's not the greatest, not in like Europe as well, but overall in the US, North America, it's slightly better. But again, it's like, for example, like it's, you know, some of the like post work sort of times. So if everybody's kind of gone to work, come back, and then now they're just, you know, potentially going out for dinner or whatever, then they'll probably miss the analysis as well, right? But it's okay. I just want to set it to one time. What?
Worst case, you can watch the VOD, right? So
Yeah.
like the recording of it.
Yeah. Any final questions?
Buy or sell?
Buy or sell? Man, it's looking like we're probably gonna get some sells once price re-breaks some of these highs to continue down to fill 2016. But maybe Asian session. I think it's not bad if it's like Asian session. You've potentially, like at this point, if you get you got a 30 closure, right? 30 closure, which is bearish. If you start getting 30 closures below this range, I'd say probably put it below here. Once you get 30 closures below there, look for a top wick to break the daily high. And then as that's happening, if you then flip bearish to continue down, that'll be what we probably could take. So something that looks like this, where you get a breakout below. I'm not expecting it to drive at this point, no liquidity, right? But if you then come back up and does whatever it wants, right? It can come up all the way or like, you know, start rejecting it around these areas. And then after that, you start closing below again. Then yeah, I'll look to take these positions to continue down to fill probably this range. But that's probably the only thing I can like even think about at the moment. It's definitely not a time to hunt, I would say, because daily no top wick, weekly no top wick, 4 hour obviously no top wick, 1 hour and all of that as well, right? But yeah, until you create a top wick and show overall direction, I can't really do anything. But yeah, cool. Zooms. I'll see you guys tomorrow for the members only if you guys are here.
Surely.
Sounds good. Right, I'm gonna end it with the YouTube boys, but it's been a pleasure. We have a new week, exciting stuff. So yeah, I'll catch you guys tomorrow.
Sounds good.
Yeah, cool. See you guys.
Right, thank you.
Alright,
Yeah.
see ya.
No worries. See you guys. Yeah, so YouTube, we're gonna be ending it relatively soon here. Giving it a couple more minutes. I'll just see whatever questions you guys still have. Do I consider order blocks when trading? Yeah, so unfortunately I don't look into order blocks, but it's probably a valid strategy, right? I know order blocks, or the people who trade order blocks, have found success. If not, it wouldn't be a strategy that's kind of out there. So if you want to trade order blocks, cool, but unfortunately I don't really know too much about order blocks, so I can't teach you anything on that kind of note. But yeah, guys, it's been a great stream. Thanks for coming in, joining up the streams. Thanks for kind of engaging, asking questions. We will be back this week, right? We'll be back on Tuesday for you guys. On Monday, it is a members only stream. So like Johnny, like Mo, like Jacob, who are on the Zooms just now, we have that kind of private session where they can ask whatever they want. And then kind of Tuesday, Wednesday, Thursday, we continue publicly for everybody. So, but yeah. It's not too exciting of a market open in terms of the weekly. No massive gap, no massive push, right? But you know, this is good, right? Because we're in the ranges. We can analyze, we can understand where price potentially wants to go, and it's overall good for us. We also have no news on Monday and Tuesday, basically. So yeah, we should see some pretty good price action, hopefully. But yeah, thanks for joining up the streams, guys. I'm going to end it around here. Hope everybody has a good rest of their day. And yeah, do I do mentorship? Yeah, so the mentorship, which is tomorrow's like members only stream, that's the mentorship. If you want to join, just ping me a message on Instagram, EvolutionDVS, and I'll see what you kind of want from that. But cool, thanks for joining, and yeah, if anything, just message me. You can add me on in Discord or whatever. You can find me on Instagram, EvolutionDVS. But yeah, I'll see you guys all on Tuesday. Thanks for joining up, and peace.